Hello, traders. It's Thursday, the 2nd of July, 2020. It's 8:02 a.m. Chicago time. Uh, this is episode number 1789. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Happy non-farm payroll Thursday. You don't see these often. Generally, we push back to the following week, but here we are. This morning, we got non-farm payrolls and unemployment which were blockbusters. They pushed right through expectations. Uh, we got a lot at that 7:30, 8:30 period. The headline, of course, is the non-farm payrolls expected at 2.9 million plus 2.9 million jobs gained back. Came out at 4.8 million, 4.8 million prior 2.509 million. The unemployment rate dropped from the expected 12.3% to 11.1, the prior's 13.3. At the same time, we got initial claims, which came in slightly higher at 1.427 million claims, new initial claims versus 1.34 million. And then we also got balance of, we got balance of trade for May, which came in worse at a deficit of 54.6 billion versus 53 billion expected. So that's really what's driven this push higher. The S&P had an SOC. I noted it down, and now it's not in front of me. The SOC, the scene of the crime for the S&P, is 3125.50. That is the point from which this launched. It was actually slightly higher just before the 7:30 or 8:30 launch, and it dipped and then it pushed higher. But the SOC is 3125.50 for the S&P, and we're currently trading up at 3142.75 with a high around 3145. So that's where we stand today. The market allocation is to risk this morning. The Euro stocks leading the pack. Euro stocks up 88 points or 2.78%. 2.78%. And the numbers out of the Eurozone unemployment rate came in better as well this morning. Before that, came in at 7.4 versus 7.7. So overall, risk allocation is the allocation is to risk this morning. And the Russell's leading the pack in the U.S. markets. The Russell's up 1.94%, 27.6 points. The Dow's up 439 points, or 1.72%. Crude oil's up 55 cents, or 1.38. So the usual suspects that you would expect to pop higher on good news are higher. Gold is off. Gold is back down at $1,767.60, down $12.30 or 0.69%. The bonds are off just 24 ticks, and the dollar's off 22.5 cents. And so and so this is where we stand this morning. In terms of what's ahead of us and what's expected, we do get factory orders in the U.S. at 10 Eastern, and then from there it's relatively quiet till the evening at 7:01 p.m. Eastern. We get GfK consumer confidence out of Great Britain, and that pretty much wraps it up. We get the Kaijin. I think that's how it's said. I always get it wrong. Out of China, Caixin Services PMI at 9:45 Eastern. Now, a reminder that tomorrow is a holiday here in the United States. We have Independence Day on Saturday, so the official holiday is tomorrow. The futures exchanges will be open as per usual, but will close early at noon Central, 1 Eastern. Not the greatest day to be trading. Suggest you go out and enjoy the weather if you have it. So just remember, today wraps up basically Basically, today is the end of the day, essentially. Okay, I mean the end of the week essentially. So just pay attention to that. At the end of the day, we expect positioning for the long weekend, people to take off. So official beginning of summer. So that's where we stand. Let's take a look at what was expected yesterday. The primary scenario is that we are likely to push through the prior day's high. Remember, we left an excess on the high and then to fall back into range and bounce up later in the session. That's the primary scenario. Here's what actually happened. We open up in a what is a clean and clear opening swing. We have a nice little impulse up. So now we've taken out that high as expected, and the expectation under scenario one will be responsive. And I expected it down at 83, 80, and then potentially a push down into 69 and a quarter before the bounce back up. What it did do is it went sideways pretty much for the entire session. As you could see, we had a neutral day. We had a neutral normal day. We took out the IB high right here. The IB was formed and immediately taken out. Then we took out the IB low down here. Then we took the IB high again, and we tried to extend into the close, but we finished right on top of what is a completely balanced profile here. Look at this thing. We have VWAP, point of control, and mid all in the same area. The market yesterday did a good job of testing higher and then testing lower and then going back near highs and holding steady up there. The price discovery was very clear yesterday, and we finished somewhere in the middle. I did expect it to run up, given all of this consolidation and the fact that it was holding. Remember the green on my chart, this green line right here, that is the prior day's high. And so the expectation was, because it kept holding this green line, the expectation is it's likely to squeeze shorts, and it did into the close, but not by much, just 4 points higher than the pre-existing high. And then it fell right back into balance. So it looked to me like it was exhausted. By the time it closed yesterday, it seemed like it was exhausted, and it stayed near that 3100 area. The MC point of control shifted up 3102.50, and it seemed like we are likely to test lower overnight. So the overnight session kind of carried the auction forward as expected and tested lower. Where are you, overnight chart? It's taken forever to start here. Twirly, twirly. I'm taxing this PC again. Sorry, this is taking forever for some reason. Yikes. I think this is going too far back. That's the problem. So let's just change that real quick. I don't need more than 20 days. So the overnight session, as you could see, opened up and it dipped down. And it dipped down, and that was the expectation. The expectation was it start moving towards 3080, and instead it dipped down and pushed higher, and then the Europeans came in and held sideways and started to take off. Some good numbers out of Europe, and then finally non-farm payrolls pushes us higher. So volume is actually quite relatively low for the type of action that we have, and we have a quadruple distribution profile here. So no balance in the overnight session, price discovery, and what we have is delta and price moving in the same direction. We are working our way through through the gap zone left behind from way back. I think, let me see where the gap zone is. Gap zone. 3137. So from the 5th of June, we're working through this pretty wide gap zone, and we pushed last week's high, so we have a higher high on the week finally. We pushed last week's high, which was at 3145. As we are speaking here, the market's trading at 4250, and it's likely with the stretch and the extension of the overnight session. I'm expecting it's approximately 52 points or so already. Um, and the stretch tells me that we are likely extended. I mean, we have a market that has pushed higher uh, 2 days ago and consolidated, pushed through the high, consolidated, kind of completed the push higher, the impulse higher, consolidated, and now it's extending itself. So this is the extension move today. I'm expecting a response. I'm expecting a response today into the open, and so we'll see how that works. Let me show you what the uh, heat map looks like. Very interesting looking heat map. Here's the SOC 3125.50. As I said, this is the non-farm payroll, and you can see that they're just lifting like crazy, a lot of collisions, and then it finally kind of butts its head against 42, pulls back. This is wave one, wave two on the pullback, and then there's wave three, impulse pullback continuation, and now we're kind of consolidating sideways. We've managed to extend through 3145, this liquidity area here, the prior week's high, and flush through the stops. You can see the red line right here. This is indicating that stops were run yesterday. Why is this off the screen here? Stops were run not yesterday, above last week's high, and then from there it's been quite calm. The red line is kind of sitting sideways, and this is just drifting, leaving us with this dark um, dark matter beneath us, this void beneath us, with both sides kind of not participating as much, waiting for the next leg. So it's important to sit and watch carefully on the open today how it responds, whether it gets responsive sellers pushing price down towards that 3135 area, and then 3125 to bring us back into line. Doubtful that we would get back to the SOC. This is relatively good news here for the economy. Um, but overall, I think there's going to be a kind of a wait and see attitude. Look at the liquidity above, liquidity at 3150, and then gradually decreasing as we move away all the way through 47. My expectation is we are likely to push into that and then fight it, and then ultimately rotate down back down to 3140 and then 3135 to consolidate into the close. That's my primary scenario for today. So let's take a look at that. What are we expecting for today? Again, the context here. And by the way, if you have not checked out EdgeClear, I know I keep plugging this. This is my baby. It's a futures brokerage that is designed for traders by traders. Um, lots of knowledge, lots of experience from the group of award-winning brokers that make up the team, with me as backup. I suggest that you take a look at it. I would definitely appreciate your support with edgeclear.com. Here's what we're looking at for today. So we have um, a gap zone. So if we pull up the master levels, you'll see that the last non-farm payrolls caused a gap right there. gap down, and we are basically coming right back into the gap mid is just beneath us at 39 or so. We are trading right in the gap from the last non-farm payrolls. The expectation this morning, the primary expectation coming into this big gap zone is an open auction out of range that pushes the high and squeezes into the 3150. I expect a fight, I expect a squeeze, but I'm looking for an impulse down at some point that brings us back down towards 3130 to consolidate before we finish. I expect the gap to remain open. I expect this gap zone to remain open beneath us. So I'm looking for this to remain open, but I'm looking for responsive selling. And the context of this is we had this day, Tuesday, where we broke the one-time framing down, and what we did is we we pushed up, then we had what basically was an impulse higher, and then we have a continuation consolidation, and now we're gapping higher. This is likely extended. Um, this is likely extended, and it's likely to pull back on today's action into not all the way down to balance, not all the way down to yesterday's range, but I expect that it's overextended at this point, and it's likely to push that high. But there, as I showed you on CT bookmap, the prior screen here, on the heat map, I showed you that there's quite a bit of 3150, which again will likely attract action up there. Those are offers to sell, and I'm expecting it to kind of poke through that and then run out of steam to pull back. That is the primary scenario. The secondary is an open auction that pulls that is immediately responsive, consolidates at the naked POC at 3140 3132.50, again back into that 30, down into the overnight point of control, impulses back up, holds steady, and just grinds its way towards 3150 before it rests. I'm not expecting a lot of range today. Now this is good news. The amount of jobs that have come back in the U.S. over the last month, but a lot of people got furloughed, and with the expectation that when businesses open, when restaurants open, that these people will come back. So the expectation was for these jobs to come back, but they were stronger than expected. So those are the two key scenarios. Just remember, uh, you know, there's going to be some point today where POTUS is going to come out. We've seen this every time. There's a good jobs number or some big number. They're going to come out. He's going to come out. He's going to take credit for it. So pay attention to what's being said there and what may be offered up to help buoy the market still. So that's going to be important. But overall, non-farm payrolls, we see the action early on the first 2 hours, and then it just dies out. And that's why I'm not expecting a gap fill. The gap zone fill down to 31.1775 from yesterday, and I'm expecting a stall. So once we get into that 3150 area, maybe a little bit above 3155. So 50 is important above, 30 is important below. Okay. Somewhere in there, I expect the market to kind of halt and sit sideways. Okay. So that's what I'm looking at for today. Again, tomorrow is a holiday. Tomorrow's a holiday. It's the market will be open. It'll be open till 1 Eastern, noon Central here in Chicago. And it's a long weekend, so expect some positioning at the end of the session. Okay. Again, if you would take a moment and have a look at what we're offering at EdgeClear, we're offering the best price on the micros on the market, no strings attached, 98 cents all in, including Rhythmic, the best data feed out there in my opinion, and also low cost commissions on all other trading products. It's worthwhile. It's worth a look. Please take a moment to check it out. And of course, if you want to hit the like button today, that would be great too. Good luck, and I'll catch you on Monday morning. Take care.